James.
Raf.
How you going, mate? How you going?
Doing well. Yeah, how about yourself?
Not too bad. Now, you have worked in a co-working space before.
I have, yeah.
I prefer the name polyworking space.
Yeah, I can vibe with that. I did, yeah. In fact, I worked at a WeWork for a number of months.
Mm-hmm.
My clearest memory of that is hearing a woman have a tremendous breakdown / argument in one of the Zoom booths.
Zoom booths. I actually hadn't been in a Zoom booth ever until 2 weeks ago. For the first time, I was trying to, at this place that, doing some work for, I booked a room and it turned out to be a friggin' booth. Horrible, horrible, horrible thing that should never have
they're pretty
been
bad.
allowed to exist.
They're normally, they're never good because they always have there's something going on with them. Like either they're incredibly stuffy.
Oh, they're insanely claustrophobic.
Because they often have a air conditioner kind of thing that's sucking the air out or cycling air in it.
It's the closest that we
loud.
have to the Matrix kind of pod thing, right?
Yeah.
You could just sit in there in kind of a vat or whatever.
Yeah, you literally feel like you're visiting someone in a prison and you got the phone on your ear and
That is the kind of place that you would have a mental breakdown.
No, totally. And that's kind of, the entire thesis of co-working is that obviously on the one side you have businesses that are set up and that's fine. But as a solo worker or an individual, remote worker, whatever it is, you're going to make these phenomenal connections. You're a founder. You might be, here's a vision for you. Mm-hmm. You're a founder, right?
Check.
You run a company that sells cat food.
Okay.
Just pull that one out of the air.
Go on.
You might run into, in your WeWork or co-working space, someone who runs a cat shelter.
Yep, Newtown Cat Protection Society.
Exactly. They might be operating out of a WeWork. Mm-hmm. And then by chance, one day both of you are in the kitchen, you would be sort of at the kombucha tap.
Yeah.
And you go for it and then they're coming in from the right with their own those metal cups they have in WeWorks to get some booch.
Yeah.
And you're oh, sorry. Jokingly, you're what are you in for? It's kind of a gag.
Yeah.
And they say, oh,
cat protection.
Yeah, I run a cat. You go,
whoa, cat nourishment.
You go, yeah, are you fucking kidding me? That's what the entire co-working space thing. And in my experience, that absolutely never happened. And most people kind of stick to themselves and nobody talks to each other. Mm-hmm. There's zero social aspect aside. Well, I showed up once at a WeWork and there was the person at the front desk, this is one of the ones in the Sydney CBD, said, oh, it's Pirate Day today. And I was hmm? And they were it's Pirate Day. People go, we've been talking, you might have got the email. Maybe, I didn't look at it. Everyone, you come in, you dress like a pirate, you talk like a pirate. And I was oh, cool. But basically, I was dreading it as the elevator was going up to the, because I was
But you think you're going to walk in and everyone was going to be
thankfully, because the co-working thing doesn't really work.
You weren't like the kid who wore the school uniform on Mufti Day, in reverse.
There was nobody doing any of that stuff.
Just sole trader graphic designers sending off invoices.
Exactly. Yeah, that's what it should be. So there you go. That's co-working.
I did some brief work many years ago, freelance, for a co-working space called Your Desk. I believe that they're not around anymore.
Yep.
I don't know if they got through COVID. They were really good. They had 3 locations. I worked very briefly on a campaign for them. But one interesting insight that they gave me was when I was who are your customers, this, that, and the other. There is a not insignificant percentage of customers, obviously in the sole trader space, who book a desk, are people who've kind of been freelance kind of creatives and graphic designers and this kind of thing, whose wife or girlfriend has gotten pregnant and are basically oh, fuck, I need to start taking things seriously. And it's what's number one thing on my checklist to start taking things seriously? I should book a desk at a co-working space. Basically, it's just holy hell, I need to just stop
See,
taking 3 months to send an invoice and like vaguely doing work here and there. I need to get my life sorted. Co-working space.
See, I put myself in the perspective of like an investor listening to the pitch, and they tell me our like total addressable market is guys who freak out when they learn their girlfriend is pregnant. I don't know if that's a sustainable business.
Well, we are obviously talking about a business that turns out, as I've said before, is a sustainable business, but turns out that at scale,
it's a challenging one.
WeWork.
WeWork.
It's not looking good, folks.
No. We talked about WeWork as in one of our very first episodes. Would have been the first 10. But we were specifically talking about Adam Newman, founder of WeWork.
He started a company called Love, which presumably still exists.
Oh, no. He didn't do Love. He was Flow.
Oh, sorry, Flow. You're dead right. Love was different.
Flow was the guy that did one of the checkouts. So we talked about it kind of briefly, but really we only touched on it a little bit because on the assumption that most people who listen, if you're into Down Round, you're probably at least like glancingly familiar with the whole WeWork thing. There's been a recent update, and not a positive one if you're a WeWork head.
There hasn't been a lot of positive news if you're a WeWork head.
You know,
the WeWork bulls.
Post-2019, if you're a big WeWork stan, you haven't been eating good.
There's one good day for WeWork, I would say.
Which was that?
When they went public via a SPAC and for whatever reason the shares pumped 13%.
Even it's a kind of a qualified dub. There's no, they were coming from a very low point at that point.
Yeah.
The story in question is that WeWork announced in August that they have serious doubts about their own capacity to, and we're using the technical language that was used, continue as a going concern.
Yes, future viability. Concerning.
Minimal. And that they may need to declare bankruptcy.
Yeah, sorry, I'm not laughing because we love to see businesses flourish, obviously.
Well, I'm laughing. I don't know about you, but I'm certainly laughing.
The WeWork debacle, we don't need to rehash old ground, but for those who aren't fully aware, very quickly, WeWork, Adam Newman, who is obviously one of the kings of the Down Round space and the Down Round podcast,
I believe we called him a certified pimp. That was also
we got it right. That's once again vindicated.
Yeah.
So Adam Newman founded WeWork. What's WeWork? Basically, the business model is they take out long-term leases on a building. This is a tale as old as time, and they sublet it to anyone who wants it, and create an epic environment where meeting rooms and stuff are booked using technology, and like people are greeted by a receptionist.
There's beer on tap.
Yeah, kombucha. They have
vibes are through the roof.
Every Friday night, they've got an inspirational speaker, to talk about how the customer is ready to acknowledge the stakeholder and climate.
Yeah, it's classic stuff.
Yeah.
And they are like the standout sort of business of like another Down Round classic topic area, which is the zero interest rate.
Yeah.
Environment.
The vibes on WeWork were absolutely through the roof. They were about to go public at something like $47 billion valuation because Adam Newman, he's the long-haired, crazy founder. And we were talking about this before, like in that era, in the low interest rate era, the one low interest rate or zero interest rate phenomenon was the crazy founder, which, typified by Travis Kalanick at Uber, but Adam Newman was really the king of it. But so Adam Newman, we're talking just randomly rocking up at a WeWork and pouring tequila down like employees' throats, and also being barefoot is legal. He's like a barefoot guy.
Yeah.
Butcher, and WeWork was going to be the biggest thing on the planet.
There was a real model of like a super flamboyant founder, and I think those two guys are basically the encapsulation of that era.
But it was also caught up in like Steve Ballmer doing like Microsoft presentations as well, where like you've got your CEO out on stage like yelling, and like the employees are going like, whoa! Like every time the CEO speaks, it's like a rock show, and like there's lights. And
although this was even like an evolution of that, in that it was kind of like the mixture of classic tech founder plus like the boy persona.
Yeah.
Where it's like
but plus new age. You got to throw some new age in
there was a bit of new age in there. Yeah. Travis Kalanick was definitely more on like intense frat boy side. Yeah. Whereas Adam Newman was the guy that, he part of his pitch is he thought that like subletting office space was somehow going to lead to like the liberation of humanity.
Well, his quote was, WeWork was the first physical social network.
Exactly.
Like this kind of gear. And, WeWork was going to be education. They had schools and revolutionized education and living.
We're gonna completely change like human social organization via subletting office buildings.
Yeah, total addressable market of the entire planet.
Yeah, exactly.
Because like everyone lives somewhere and works somewhere, and that's all going to be us.
Yeah, and he was also like a kooky guy with a thick Israeli accent.
Yeah.
Probably in thanks to those two guys, they typified that model a bit. This really aggressive founder, which was like a zero interest rate phenomenon in the sense that like both of those guys, Adam Newman and Travis Kalanick of Uber, pursued like growth at all costs.
Yeah.
The idea of like our job as a founder is to run roughshod over like regulation where possible. We just need to push, get bigger and bigger and bigger.
We're $1 trillion company.
We're a trillion, and we'll worry about the making money stuff later. Obviously, it's worked better for Uber than it has for WeWork in the sense that, you know, Uber, you know, and we can get very technical, but like on paper, they're kind of making money now. But also as a result of those guys, they helped like forge that era. They also led to its like collapse in that, yes, you get guys kind of like that coming out of like the Silicon Valley startup scene and like the entrepreneurial world, but they tend to be a lot more subdued. When you think about like the big founders right now, your mind probably goes to someone like Sam Altman of OpenAI, who has kind of reverted to, even though he has insanely bold ambition, like don't get me wrong. Like
I mean, Elon is also like a typifier of this model, though.
That's
right?
true. Like, it's true. Elon is one of the holdouts. He's one of those guys, loud, in your face.
Yeah.
He's like always posting. But again, he is still kind of like a bit of a successor to it. Whereas someone like a Sam Altman, who is like, don't get me wrong, he literally wants to build God.
Yes.
And like he wants to like.
And look at the other things he's into. It's all like weird human biology and like. One of the co-founders, or at least a huge investor in Elon Musk's Neuralink and shit like that. Like he's into some stuff.
He wants to like literally change the fabric of humanity as it existed, but he's also kind of like a subdued, quiet kind of like he's certainly not an outgoing type. But even though Sam Altman has those incredibly bold ambitions, he doesn't quite rise to the level of what you're talking about. This Travis Kalanick / Adam Newman thing, where it's like march into the office, having raised X billion dollars or whatever, pour tequila down employees' throats.
Yeah.
You know, complete like wild
Travis
company
Kalanick,
culture.
Yeah. Travis Kalanick had a house in LA that he would invite like big thinkers over that was called the Jam Pad.
The Jam Pad. Hell yeah. This is
real frat boy kind
This
of
is not
vibe.
a Travis Kalanick episode, but I saw someone else was posting. He was like, so like blasted on amphetamines. I don't know if this is actually true, so take this with a grain of salt.
Allegedly,
that he had like a figure 8 pattern that he would walk all day in the office, like just thinking and talking, just pounding this figure 8, like walking 40 kilometers a day. And if you wanted to have a meeting with him, you had to like join him on his
join the 8.
Join the 8. Yeah.
Infinity, other people would say. So that's Newman. He convinced a lot of investors at a time of zero interest rates. In particular, SoftBank is the big one. They were throwing money around, huge investment into startups with a bunch of capital to begin with.
Yep.
He basically convinced a lot of people to bid the price of WeWork up to $47 billion at its peak. They went to go public, as in the share market. If you want to go public, you need to release an S1, which basically outlines in detail exactly what your business does, what the financials are, et cetera, et cetera. As soon as everyone got a hold of this, they were like, what the hell is this? Like, you have no revenue and everything is basically about like how everyone doing yoga in the morning will change the world into this newfangled thing, decisions as a tech company. But when at the end of the day, when you actually kind of look to the bottom line, you're like, okay, you're leasing office space and then subletting it out to businesses.
And this is a big, and like it's old hat by this point, but like one of the great phenomena of the zero interest rate environment and like that whole culture at the time was like companies that were fundamentally not really tech companies. Being able to sell themselves as like, actually we're a tech company, and then therefore get access to like tech level growth and multiples.
And like this was beyond the pale even for peak hype. This was slightly before. This was before SPAC boom. So like this was beyond the pale even for that era. Adam Newman brilliantly got out of this with somewhere between $2 and $4 billion. I think it started at 4, but in the end it was kind of negotiated down to about $2 billion. There was weird stuff about him having the rights to the word we that he had to sublicense back to WeWork and this, that, and the other. But basically, in order to remove him from WeWork and somehow salvage some value from this company that never went public, they obviously pulled the IPO because it was like everyone was just like, absolutely not. Like, we are not touching this business. There is no business here. It's, a pile of fugazi. It's like yoga babble. I think the term yoga babble was invented to describe WeWork. But yeah, he got out of it. This is one thing I always think, and I think I mentioned this back on that episode, even if it's $2 billion, not $4 billion, in 200 years' time, there will be Newmans with huge fortunes, with like a power and influence.
It's created generational wealth.
Absolutely.
That will echo through the ages.
Like $2 billion, when you start running the numbers, you need to be spending a couple of $100,000 a day in order to spend less than just like the interest you get in like a high interest savings account. So yeah, Adam Newman's like children and grandchildren and great-grandchildren and great-great-great-great-great-grandchildren
will be very wealthy and influential and powerful. Yeah, totally.
All because they're an ancestor raised a bunch of cash on a lie and then like was forced out and like had to get a payout.
Yes, you hear about sort of like, I guess, obviously more an American phenomenon. Yes, in Australia you have generational wealth from people going back forever. It's obviously as American as apple pie. But, you'll hear about like some aristocratic family or whatever. And it's like, oh, it's because my great-great-great-grandfather was into textiles in the 19th century. He owned a few mills. That spread out into something. And now, as a result, myself and my family have $600 million net or whatever.
It's like my great-grandfather like owned the patent for straws.
Yeah, yeah, exactly. You know those steamships that went up and down the Mississippi? He built the chairs that went on those steamships. Whereas here it's like, my great-great-great-grandfather sort of lied about office space for like 3 years. Pretty good. Again, getting back to the thing of like pitching something as tech that's not tech. Yes, like WeWork had a great tech layer, wonderful website, lovely booking experience, blah, 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 blah. Yeah. But at the end of the day, their job was that sort of arbitrage between leasing something from a large developer or building owner and then packaging it up into desks and reselling it to like startups and sole traders. That's not really tech at the end of the day.
No.
That's the real estate business.
And it's also a business that is extremely susceptible to interest rates because, like, obviously, as I said, the business model is like you rent out something on like a 99-year lease. In order to do that, you need to raise a lot of debt financing, which you can project out over 99 years at zero. If you're only paying 0.25% interest a year, maybe a pretty attractive business. But yeah, again, as soon as those percentages go up, obviously COVID hit and that like created all kinds of weirdness. But they didn't IPO until slightly after COVID. I guess we should kind of go through the timeline. 2021, they went public via a SPAC. We've talked about SPACs before. It's a way to go public without basically doing the due diligence, a vaguely complex structure that a lot of people benefit in the very short term.
It's been on our list for ages. We should do a SPACs episode, like looking back on the weird phenomenon. But for those who don't have any idea what a SPAC is, special purpose acquisition company.
Yeah.
The idea is normally when you IPO, you're a private company, you're a startup, you've raised a bunch of capital, you've presumably built like a sustainable business, fingers crossed, maybe not, who knows. And then you will go talk to Goldman Sachs, you'll go talk to someone, you'll go through the incredibly long process of trying to get yourself listed on the New York Stock Exchange or NASDAQ or whatever it may be. They will guide you through the process. There's lots of due diligence that's done.
Yeah.
You need to go through all sorts of regulatory hoops.
Which is what WeWork originally did.
And ideally this is a good scenario because you want to prove that you're a strong business you can then sustain being in the public markets.
It's something you really need to prepare for a year. You need to make sure all of your I's are dotted and your T's are crossed. You've got like, strong governance in place, strong financials in place, auditing, all your risk and everything is covered.
It's all good. Like you've got senior level bankers who are guiding you through this and making sure you're ready to go.
Yeah, and your books are open. You're an open book all of a sudden.
Exactly. The SPAC asks the bold question: what if you didn't have to do any of that? What if all that crap you could spend?
Yeah, and so a SPAC lists themselves, basically. I'm going to do a really quick version, so like don't get up me, you investment bankers or whatever. A SPAC basically lists itself on the exchange, and a SPAC being like, we're an investment company, our books are open in that we have whatever $100 million of investment. That's it.
They go through that process, or like in a bridge one, because they can do it.
They're so
simply.
simple though. Like the business structure is so simple. It's quite easy to just like open your books when you're like, we don't buy or sell anything. They then merge with a private company that's usually much bigger than them, and then change their name to that private company's name, basically. So it allows that company to go public really quickly.
And so,
without the due diligence, basically.
Yeah,
But I mean, obviously, like quarterly earnings, they then have to open their books and show everyone what the business looks like. But that is what WeWork did in 2021 at around a $9.7 or to $10 billion valuation. All these numbers are US dollars, by the way, for anyone in Singapore or whatever who's listening. 47 billion USD. It was around 10 billion USD that they went public for on the SPAC. As I said, pumped 13% on the day.
Looks good.
But we're now, 18 months later or ish, they're down to around 200 million and saying it may be zero.
We can't. Yeah, exactly. We don't have enough money to continue. They're burning something an absurd 9 figures or something per month or whatever. They are burning through so much money.
Yeah.
So like, to give you a bit of perspective, there was a point where like WeWork was the largest leaser of office space in New York, the largest leases of like individual leaser of office space in London, and New York and London, undisputably the two most kind of like quote unquote important cities economically in the world.
Financial capitals.
And WeWork was absolutely dominating.
Expensive rent. Known expensive rent.
Totally. So just to give you a sense of the scale there.
But that is the issue, right? At the end of the day for WeWork is like, this is a business, as we've said. Buying up or leasing, taking long-term leases, splitting it up and subleasing is a viable business, and it's a good business. People want it. People want smaller office spaces and large buildings don't want to be doing it. There is an arbitrage there. There is a business to be made. But their issue, obviously, is that they have so much of the most expensive real estate on these huge long-term deals that last forever that they have to justify and account for, and debt finance, basically, in order to like provide it.
Totally.
That is the non-sustainable part.
Yeah, and
it's not a business that needs to scale quickly. It's a business that probably should scale organically.
Exactly. And then it also, they were pitching the idea pre-COVID, because that was when they were hitting their absolute hype peak. And yes, they got smoked by the long sort of lockdown periods where people couldn't go to these co-working spaces for a prolonged period of time. And obviously, one of the big sells of WeWork is that your business could, if you're a startup or if you're whatever, you could lease like a chunk of one of these WeWorks.
Yeah.
But also the other side of it was like you could get like the WeWork all access as an individual. You're a sole trader. You're like an individual person. You pay X amount and you can go work from every WeWork in the world.
Yeah.
And this
is like a membership card.
This is what I had for like a period of time. And it was nice because, I would work out of the one in the Sydney CBD, but then, I would go and I worked out of a couple of ones that were in Boston and a couple of other ones in the US while I was over there. And, it's great. It's not.
But again, imagine like that framing though all of a sudden, right?
Yeah.
This is like a membership to the world.
So exactly. Like most like real estate businesses that are buying up office buildings and cutting them up and subleasing them are not dealing with exactly the problem of, actually a chunk. And certainly one of the most public parts of our business. If you ask the average person, what does WeWork do? The picture in their mind would be that. These sole traders who can sort of swan around the world and go work from sort of like an identical experience, relatively identical. We never got like the beers on tap in Australia, I don't think, or at least at a much reduced level, wherever you are. It's this true bloody like global cosmopolitan sort of like business.
But then the reality is when you look at their financials, actually like the majority of their revenue is coming from businesses that have like 100 to 150 employees. And don't get me wrong, there's a lot of benefits for them because they're like, we want to increase headcount by 30 people. You just hire out a few more places and the WeWork that you're in kind of slightly restructures and moves people around. That's very handy. Like that's great as a business to be able to just expand that freely as opposed to like finding new rent in a new place and every time you grow headcount having to do that. But like the reality is what turns out is the most sustainable market and where most of their revenue comes from is like that, like kind of 30 to 200 person organizations or organizations that are big multinationals that, have a bunch of outposts around the world and like that's where they're getting their revenue in, which is slightly less sexy. It's still a business, but like this idea that it's like, oh yeah, we lease out office space to other businesses.
Yep. And this was kind of the thing they did after all the Adam Newman ugliness sort of happened and like the failed IPO and blah, 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 COVID, etc. So they hired, I brought in a new CEO whose name was Sandeep Mathrani, who came from like the property world.
Yeah. The board was basically just like, we need to try and salvage some value here.
Yeah.
And apparently he's like a relatively
he's a respected guy. And, you know, he came in with the remit of like, I'm going to run this like a real estate and property company. I'm not going to run it like a hyper-growth tech startup.
Look, if I'm an investor and maybe I have a representation on the board, or at least I can kind of pressure the board to like make decisions like this, and you get him in, and after that insanity that happened before, I basically get out of it by being able to sell my shares at 10 billion. That's a win. That's a W for them. Obviously now, given that 18 months later, it's basically worth zero.
Yeah.
Like, as in, it's dumping on retail, obviously. Like, it's dog. but like, he did what I'm sure the investors would have been relatively happy to have seen happen.
Yeah. And that was his sort of goal. And there was like stories over the like past couple of years where it was sort of like there was some potential success or at least hopeful things that looked like they were happening. He was trying to renegotiate a lot of their absurd deals that they had struck with some of these like incredibly prime real estate locations. Even though he was only meant to be like an interim CEO, essentially, he did eventually leave and move to another company, which was like a hit to morale. They've got another guy that's in there right now that's running kind of like another interim CEO role. But yeah, it just turns out the business as it was constructed with like the deals that it had, the places that it was in, you know, even look at WeWork in Sydney. They've got like 6, I'm pretty sure, co-working spaces, all of them in the CBD, all in very, very desirable locations. You extrapolate that out to some of them, I mean, Sydney is one of the most expensive real estate locations in the world, but like even more of them essentially.
Yeah.
And it's like, I don't understand how that could ever have been salvaged in its current form.
Yeah.
It seems that it hasn't been.
Yeah, tough business.
Totally.
A tough business, low margin business.
Exactly.
Not a huge, like a business that is very hard to get like a multiple of, as in like, how do you value a company like that? If you're like an investor or whatever, like it's got to be a multiple of earnings, like what profit they're making.
Yeah.
It's such a low margin business. It's just, the valuation is just not there.
No, and I think, you know, the thing that kind of elevated this above and beyond, and this is the same for all of the sort of like co-working universe, which I'm not saying is necessarily a bad business fundamentally or anything, but, you know, a lot of the co-working thing was like, we're not just allocating real estate space and subleasing it and whatever. We also have like that extra layer of experience, the innate sort of networking that comes with working in a kind of cool space with a bunch of other cool young startups. You know, as we said at the beginning, you've got your cat food business and your cat shelter business all operating out of the same building.
And my kids get to go to this revolutionary new school. Like they opened schools that people paid, very expensive schools that people paid to send their kids to, that, you know, had a full Montessori-esque, like adjacent, but like for high school, unstructured, new way to do education kind of environment.
Totally. And all that stuff was like, you know, I'm sure it's nice in some, and it's completely contingent on location. As I said, I went to a bunch of the Sydney WeWorks, and they didn't really necessarily strike me as like complete fountains of networking and connectivity between different businesses.
Yeah, I was having a chat with an architect who worked for WeWork for a couple of years, and he was like, yeah, my job is basically just I'm given a blueprint and I need to just split it into as many possible working spaces as possible.
Yep.
Like, you know, because that's how they make money.
Exactly. Yeah.
So you got to balance that with also like, no, this is a revolutionary way to live and work.
Exactly. And it's like the spaces were nice.
Yeah. As I said, like the features are good, and that is great that you can, anywhere in the world, you can log in, and it's got a nice interface for like meeting bookings and that kind of thing. Like it was nice. It's a nice experience. It's very handy if you want to scale up, scale down. You know, that's great.
Yeah.
But it's just not a $50 billion business.
No, totally. And we should also mention the fact that the bounce back from remote work into like hybrid work was probably slower than WeWork would have wanted.
Yeah. Because there was that bullish idea for WeWork, especially when it had the new CEO, that it's like maybe the future is all of these businesses like multinationals selling or getting out of their like leasing deals in
Exactly.
Singapore and Hong Kong,
Exactly.
and London and Paris or whatever, and moving into more of a WeWork situation.
They thought that like there was going to be mass downsizing of office space, and they would be the guys sitting there ready to say, "Hey, you don't actually need to own 6 floors of this building in downtown Sydney. You can just like take out a small amount and then have your staff sort of cycle in and out as need be, hot desk, whatever." I don't think like that's not really what has happened. And like, I don't think there's been enough, like, there's been like a systemic downsizing of office space. Yes, obviously commercial real estate is struggling in a lot of ways, but it hasn't translated into that.
I think if anything, it's made working from home way more acceptable, right? Like, as I said, if in the case of your desk, one of their insights was that it was people being like, oh, I need to take this seriously, I'll start renting out a desk. Like, I feel like that's gone. Like, working from home is totally fine.
Yeah,
it's not more professional to go and rent out a desk.
No, you're either at like the full-fledged office or exactly
where you can control where all of that stuff that WeWork provides. You actually want to kind of control as a business because that's all like culture and oversight and differentiation and team and whatever. You don't want it to be like the same generic experience. It doesn't matter if you're at Reddit or TikTok. You get the same like vibe. You want to own the office thing that you've just downsized, and if people aren't in the office, it's perfectly acceptable for the CEO to be joining a meeting from home.
Plus the fact there hasn't been as much of like a radical shake-up of how the office actually functions beyond the work from home aspect. So it's just like they were just really poorly placed. There was no major shift that really benefited them.
No.
And all they were left was kind of like carrying the bag of this giant global leasing empire.
Yeah.
Which was like incredibly hard to turn into something that was like specifically sustainable as like a why did WeWork in its current form even need to exist with that sort of thing? Obviously not. And as a result, they're now staring down the barrel of basically insolvency.
Yeah. Well, it's another thing with these businesses, right? Like, as we said, I just said, like, if you're a business that is renting off WeWork, the experience is great because you get all of these benefits. Well, like, it turns out that's really expensive to provide. And so either the prices need to be way higher or the business doesn't work.
Yep. Or, I know this is tough. It's a tough call to ask of WeWork. But if I was putting in there as a liquidator or to like run bankruptcy or to forestall bankruptcy, I'd say no more talk like a pirate day. Just get rid of it.
The Hino administrator, number one.
The people at the front desk shouldn't even bring it up. Just don't.
Even if it's on everyone's mind.
You know, even if someone asks, you know, is it talk like a pirate day today?
If someone kind of walks in and goes, "Arr,"
yeah, you go, shut the fuck up, and you cancel their badge. That's how we save WeWork. Down Around now has a Substack where we are running our premium podcast, a second episode every week, plus plenty more goodies to come in the future. So head to downaround.net to sign up.